The AI revolution is gathering steam. Most of us are wondering whether it will replace us at work. But one man has been asking himself how best to profit from the boom. My old friend James Allen has found what he claims to be the best angle. It's certainly counterintuitive, and on the 17th of September, he believes the move will begin. James, you've been at the forefront of several big tech trends in the last few years since I've known you. The green tech boom before the pandemic, the green energy boom, and a natural gas boom, just to name a few. What's caught your eye about the AI boom?
What's caught my eye about the AI boom? I guess it's just so all-encompassing, the AI boom. It's going to affect every facet of the economy. I think upwards of like 2/3 of companies are investing in AI in one shape or another out there. And it's just going to be the next big technology that takes over the world, really. It's already started to happen. And of course, we all know what this means in terms of energy. AI has a huge energy requirements, power requirements. We all see headlines in the newspapers about data centers across the world. The US is at the forefront of this right now. Obviously, they're rolling out huge amounts of data centers. They're all very power hungry. All the big tech companies are investing massively. And associated with that, obviously, there's a bottleneck within this as well. So my job really has been to find out where that bottleneck is, what's going on, how we can best address it, and for investors, what's the best way to play it.
As you say, you're not recommending investing in the obvious AI stocks, the obvious companies that have already boomed on the back of this AI mania that's played out over the last few years. You're also, however, not suggesting people invest necessarily in the energy stocks that are driving this energy boom to fuel AI, at least not directly. So take us through why you've discarded those two options and focused on something that's even further along the supply chain and even more indirectly related to AI.
Yeah, sure. So the first part of that question is, why am I not just recommending a normal sort of AI stock, the Nvidias of this world? Now, we all know that these companies, they've been on a tremendous run over the last year to 18 months. They're at all-time highs. The market now is increasingly jumpy about their future growth prospects. We just saw Nvidia's earnings results a couple of weeks ago, and actually they did quite well. But because their growth seemed to be slowing down just a touch, they had a big sell-off. Now, I think this is symptomatic of what we can see sort of further forward, really. I think, I think the market is increasingly sort of skeptical, I guess. Can they maintain some of this growth? And also, how are we going to pick the best AI stock going forward? There's a multitude to choose from. It's unclear who is going to be predominant over the next sort of decade or so. I think it's just on safer ground, really, to go one step removed and go for more of a picks and shovels play. I think that's the more sensible option. And likewise, your second part of the question about the energy. Now, energy it's not one size fits all in terms of what is the energy requirements going to do best out of AI. Now, we don't know that right now. So we're seeing a natural gas surge in demand because of AI in the US. We're seeing renewables actually increasingly in Europe looking to meet some of the AI demands in Europe. We're seeing nuclear as well. Sam Altman has been quite clear that he thinks nuclear will be the answer. Now, again, pick the winner there. It's unclear which is going to be the best technology to meet this AI demand. So I've gone, again, picks and shovels play, looking at everything. I don't want to try and pick a winner as such, but I'm trying to think, what is the commodity, or what is the way best to that, no matter which way who wins the race, essentially this commodity or this investment should do very well indeed.
Yeah, that seems to be the smart way of going about it. And it's also the way that you argue is going to be the most profitable. But I want to have an awkward one for you here. Are you worried that AI's enormous energy demand, this voracious energy demand, is actually going to undermine it and cause this boom to fizzle out?
I'm not so sure. I mean, there's so much now power data centers now coming onto the grid. I think this is pretty well set now for the foreseeable. We're seeing lots of operators turn up and try and meet some of this demand. So I think it's clear this AI demand is not going anywhere certainly for the time being. I think it is taking over. I think all the sort of the companies in the market have been pretty clear. Investment is happening right now. I don't think this demand is going away anywhere. I think that the bigger risk actually is missing out on this demand. But either way, I mean, I think certainly the investment I've pointed out, I think it's certainly a strong AI play for the reasons above. But the fundamentals alone, just for this commodity, I can say it's a commodity. I think they're pretty compelling, regardless. I would say so. Certainly the AI boom, and I think it will be a sustaining boom. I think that's going to really be a big fuel for this commodity. But certainly it doesn't hinge entirely on AI to prosper. So I think investors can be pretty confident it will do well, regardless of the twists and turns of the AI story over the coming months and years ahead.
Yeah, there's a couple of other angles at work here, like just the net zero boom in the energy transition in and of itself, and a couple of other stories. In fact, one of those has allowed you to put a particular date upon which investors should make their move, or should I say before a particular date. So take us through the logic there.
Yeah, there's a specific date. There's a catalyst coming up, September the 17th. That is when the Fed are looking to announce sort of interest rates and what they're going to do. There's been signals from other parts of the world. Central bankers have dropped interest rates. All eyes are on what the Fed will do on September the 17th in Jackson Hole. It does look increasingly likely, nothing's ever guaranteed, increasingly likely that they are going to decrease interest rates. And this will be probably the biggest interest rate cut, or the most consequential interest rate cuts, certainly for the last few years, I would say. I think this will signify that inflation really is potentially under control, and I think this could stimulate increasing demand for the commodity I pointed out. So I think wise investors would do well to get in before that date. I think we've already seen some movements because expectations are that interest rates will drop, but nothing is fully certain. And I think the demand for this metal really could increase once the Fed announce their announcements on September the 17th. So I really wouldn't want investors to miss the boat here, because things are bubbling very, very nicely in this market. And I think we are really ready for the next leg up for this market to re-rate post September the 17th. So I would advise all investors looking at this. I think the fundamentals are really compelling. I think we've got, the AI story is there, it's happening, that demand is coming on. And I think September the 17th will shuffle in a sort of a new era in expectations and the real fundamentals for this commodity. So that's where I would really strongly advise investors to get in sooner rather than later. That date is coming up very, very soon, and I really think the market will be fully aware of this whole story coming together post September 17th. So yeah, I would strongly recommend any investors interested in this to get in sooner rather than later.
So we've covered demand there and the macroeconomic context. What about supply? What makes you believe that this commodity's supply won't just surge to meet demand and undermine the price boom that you're expecting?
Yeah, good question. So supply, there's been relatively little new supply coming online. A lot of the supply in above ground inventories, they're looking pretty low. They're dwindling. We're also seeing China suck out lots of supply from above ground inventories. So, they've cornered some of the markets as well. So, and also in terms of new supply coming online, it takes a long time for this commodity really to come online. So, it's years, and many years, I should say. So, and there's not actually a lot coming online over the next sort of five years. The market is cornered by some very, very big companies. They because prices have been traditionally quite low. They haven't actually invested in new supply coming online. So actually, there's a bit of a lag, an unexpected deficit. Certainly, with some of these demand projections we are seeing. Certainly, with some of this above ground inventories dwindling. There's been just with the sort of clean energy boom, which I'm sort of fully on top of, some big countries now are really taking out supply of this commodity to meet some of their clean energy requirements. So this is increasingly happening. There's been some really unusual patterns emerging in the market, which has never happened before, and it's really to meet some clean energy plays from Asian countries. And this is going to happen more and more. This is a signal now that the market is changing, and we're going into a new paradigm. And I think post September 17th, I think this really could ignite. And people will start talking about this. At the moment, it's sort of quite a marginal story. No one's really sort of joined the dots, I would say. But I think once September 17th happens, once I think we can see a leg up in prices, I think the world, mainstream press will certainly be onto this story that we're running out of this stuff. There's not been enough investments. We've got huge demand requirements for the reasons we've outlined, and there's going to be an increasingly large deficit. And where are we going to get this? Where are we going to get the supply from? So yeah, it's all coming together really. I think, and it's coming together in a hurry. So lots of things are going on, but for investors, I think the best thing to do is sort of join the dots. I'm putting out a very big detailed research report on it. That'll be available any day now. Take your time, read that, but by all means, I think the best thing would be to get in before the Fed make their announcements on the 17th.
What fascinates me about the supply story is that a lot of this metal supply is mined as a byproduct of other metals and minerals getting mined, which makes the supply inelastic, because just because the price of this particular commodity surges doesn't necessarily mean that more supply is going to be coming online, given that it's mined as a byproduct. But it certainly sounds like the stars aligning story is coming together for this particular opportunity. I've had a look at James's presentation reports. What's striking to me is that it combines all of these big macro investment trends and themes that I like to write about into one single simple investment you can hold pretty much in your hand. You can actually buy it on some high streets even. So I urge you to check this out, regardless of which one of the themes we've mentioned that you're interested in, whether it's the net zero boom or the AI boom or monetary policy or just the commodity cycle. It holds all of those big themes in one particular asset class. So I urge you to check out James's presentation. There'll be a link below this video, or it might be releasing earlier next week, depending on when you watch this video. We're awaiting the final cut as we record this, so we don't know either when it's going to be released. Hopefully you'll find it in the link below this video. If you do, be sure to click on that link. If not, come back and check us out. Thanks very much for watching.